Alrighty, guys. So what's going on here with Palantir and what's going on here with Tesla? Well, there's a very specific phenomenon going on with these stocks that you have to understand, okay? The first thing you got to understand is, now, stocks like that are what you call momentum stocks. So the momentum stock is a stock that essentially has momentum. Think of it as a freight train. Once it gets going, right, it's tough to stop it. But once you get that baby stopped, it's not going anywhere until it gets that momentum back going. And so that's Palantir, that's Tesla. And the momentum has kind of stopped in regards to stock prices. And the reason being is the news cycle has slowed down significantly on those. You're not getting any big news on Palantir in the short term here. You're not getting any big news in the short term on Tesla. The only news we kind of have had recently around Tesla could be seen as a negative in regards to delivery and production numbers. So, that definitely hinders those type of stocks when the momentum kind of dies down a bit, right? And this is an important other part to remember here is both these stocks traded obviously very, very rich valuations. Tesla trades at 126 forward P. Palantir trades at 150 forward P. Now, assuming Palantir and Tesla both beat analyst expectations, maybe those are a little lower than where they're at. Maybe it's like 130 forward P for Palantir, 125. Maybe for Tesla, it's like 120 or 110. Still, it's still very high based upon any normal stocks in the stock market that are profitable companies. So, that's an important thing to understand. Now, I also kind of I posted this, about a half hour ago or so on my X page. I said, Palantir's dropped about 16% since Christmas Eve. Are you buying, selling, or holding? Any year-end price targets for 2025? Yeah, I posted that about 30 minutes ago or so. And, kind of the sentiment is some folks are buying, right? Buying in the 60s. Don't care if it drops more. I won't miss another one on this, right? Sounds a little FOMO-y, to be honest, but that's, hey, whatever works, right? Been scaling out. I feel it needs to take a breath, and that's showing. Will rebuy on larger dips. Might be wrong, but it'd be crazy not to scale out with 250% profits. And, that's a sentiment that happens pretty quick. If you go back, I sold half my position, 74 to 78. Cost base is $7.50 to $8. So not loading up again unless it gets in that $30 to $40 range. Sentiment can change very quickly, especially in regards to these momentum stocks. If I was to post the same thing, I think 2 or 3 weeks ago, the sentiment would have been just kind of like buying, Palantir is going to 100. I think that would have been a lot of sentiment. And now you kind of see some people actually taking some profits. I'm taking some profits here. I'm not interested in buying here. If it goes down to this number, that number, maybe then I'll be interested in buying. And then, sentiment shifts pretty quickly here. Now, will Palantir and Tesla stock stay down for a while, or will those ones start to come back quite significantly? Well, my opinion is earnings. Earnings are what really is going to matter for those companies. For Tesla, margins, okay? What happens with Tesla's margins? Net margins, gross margins, margins across the board, operating margins for Tesla is going to be very, very important when they report their earnings here in a few weeks. If their margins look very, very good, don't be surprised if Tesla stock catches a bid again. And especially if the margins come in better than where analysts are expecting. Don't be surprised if that was to play out, that all of a sudden Tesla starts catching a bid again, right? Now, in between now and the earnings, you could see weakness in the stock. Same exact thing with Palantir, but not on the margin side. But in terms of could you see weakness continue in Palantir stock till earnings, that's definitely very possible, right? Of course, if the market goes full on risk on in between now and earnings, all the stocks are going up, right? That's just stock market 101. If everything's going to fly to the moon because everybody wants to go risk on for the next few weeks, and that's what's going to happen, right? But assuming that the market does not go super risk on, it stays kind of flatline-ish or maybe trends down a little bit, Palantir could have a tough time between now and maybe earnings. But for Palantir, it's not a margin story. For Palantir, it's a revenue growth story. So if Palantir reports much better revenue growth than analysts expect and report a guidance revenue number that's much better than analysts expect, then Palantir will catch momentum again. So let's say Palantir was 65 going into earnings or something, but then they come in, they smash their revenue expectations and they smash guidance revenue. then all of a sudden Palantir is going to be back $75, $80, $85. Like, boom, boom, boom. But that's a big question. Like Palantir's got to come in and smash revenue expectations quarter after quarter now for a while. They got to play the game of Nvidia was playing for the last couple of years now. Palantir's got to play that now. If Palantir plays that, stock will catch momentum again. Now, on the flip side, if Palantir reports a very disappointing revenue number, disappointing revenue guide, right? That one will still sell off. Like, next thing you know, that stock will be $50, $55 again. It'll happen quick. So do keep that in mind as well, right? These, I could tell you in these momentum stocks, when they have the momentum, like I said at the beginning of this video, they're a freight train. Look out. But as soon as that freight train comes to a stop, it's hard to get it going again, right? Once it gets going again, look out. Hey, I want to thank you so much for watching that clip here today. I hope you really enjoyed that one. What you're looking at right now is 1000xstocks.com. 1000x does not just show you a billion different metrics that are completely irrelevant. It's curated, mandatory metrics, advanced metrics, curated for long-term investors, not for traders, so you can understand a company on the highest level possible, how it operates, and most importantly, making judgments on whether you want to invest capital into a company or not. Understanding the upside, the downside with companies. Is that company worth our investments, or shall we keep our hands away? So how you can access 1000xstocks.com is you can go to the description area of this video, or you can go to 1000xstocks.com, apply for access to the service. Advanced Micro Devices, AMD. Yes, this one's a non-stop buy for the next 90 days. This stock, I believe, will 3x to 5x over the next 3 years. Yes, significant upside I see for AMD in the future. Now, when it comes to AMD, the first full year, Lisa Su, who's a legendary CEO now, because what she's done with this company, like shortly after she took over this company, it was a $2 stock. And today it's a $120 stock. Like, what she's done is simply legendary with this company, right? Her first full year of investing, she got out of some product lines. They had to make some major changes, and revenue was down substantially. But since that time period, revenue went up 8%, 21%, 23%. Then 2019 was kind of a sleepy year. They only grew revenue 4%. Then 2020, 45%. 2021, 68%, 43% in 2022. Then 2023 revenue actually went down about 4%. And then 2024, we'll see where the numbers shake out here at the end of the year when they report their earnings, but likely the revenue growth are going to be somewhere between about 10 and 15% based upon kind of analyst expectations here, okay? But that is a thing of the past, because what we're about to have happen here is go through a next major growth cycle for AMD. What I foresee happening with AMD, looking at their product lineup and looking at their total TAM opportunity in several different end markets over this next few years, is I expect AMD to grow their revenue 25 to 45% per year, every year, all the way out to 2030, okay? So we're talking substantial growth. Now, AMD over the past few years kind of been stagnation of revenues. This is where we're at right now, looking at 1000xstocks.com, our charts feature here. This is where we're at right now, right? And this is what is projected to happen based upon analyst expectations, right? And my expectations are I'm a little more bullish than the average analyst expectation out there. So I'm expecting 25 to 45% growth every year for the next basically like 5 years, okay? So we're about to go through a major growth cycle for AMD, and I've seen a lot of people get out of the stock recently, and I'm like, I don't think this is the right time to be getting out of AMD. I think right now and over this next few months is the time period you need to buy AMD quite significantly. Now, additionally, you look at AMD's earnings per share. This is where we are right now, okay? This is where we are when it comes to earnings per share. And this is where we're projected to go based upon analyst expectations here. Yeah, and once again, I'm even more bullish than where analysts are at. So, the moral of the story is, why would you want to get out of this stock right now when we're about to go through a massive multi-year growth cycle in revenue and earnings per share? It does not make sense. In my opinion, this is a time period to be buying every share in sight when it comes to AMD. Now, people have made a huge mistake in regards to this. I mean, this is a substantial mistake, and it's going to come back to bite a lot of people. And do not fall into this trap. But what people are doing essentially is they're saying AMD is not Nvidia. They're of this assumption that AMD has to beat Nvidia, has to be a bigger company, a more successful company, to like be a successful stock. And that's just not how this works at all. AMD does not have to beat Nvidia. AMD has to be a competitor of Nvidia and compete hard in the markets, but they don't have to beat Nvidia. AMD, to be a successful investment, I don't need AMD to become a 4, 6, 8, $10 trillion company. If AMD becomes that, great. I'll gladly welcome that, but I do not need that to happen. Whereas if you're buying Nvidia stocks, let's say for instance today, you need Nvidia to be a really successful investment. You need it to go to $6 trillion market cap, 8 trillion, 10 trillion, right? Like some crazy numbers that we've never seen before. I don't need that with AMD, right? This is not a winner-take-all market. When you look at the TAM opportunity of so many different end markets that AMD's in, and Nvidia, right? Like this is not a winner-takes-all. Like this is a massive growing market, and AMD should be able to grow to become a giant, a much bigger giant than what they are today in the space. And to do that, they don't need to beat Nvidia, right? I mean, I would love it if they did that, but as an AMD shareholder, I'm not expecting them to ever beat Nvidia. I'm not expecting them to be a $5, $10 trillion company, right? And the way I would put it to you like this is kind of like, let's imagine the energy drink space, right? You got Celsius Holdings, which that stock's up 1,700% over the past 5 years, right? Monster, meanwhile, very well-established company in the space, is up 61%. It's not like, oh, Celsius won, so Monster lost, or Monster won, so Celsius lost. No, both companies won. And I wouldn't be surprised if you see a similar phenomenon play out in Nvidia and AMD over the next 3 years, or the next 5 years, we could even say, for instance. I wouldn't be surprised if Nvidia does fine as a stock, but I wouldn't be surprised if AMD is like that beast opportunity, a much bigger percentage gainer over this next 3 to 5 years. I think AMD is going to blow Nvidia out of the water as somebody that was an Nvidia shareholder in the past, right? Made a lot of money on that stock last year, right? I'm completely out of the position now. And the reason being is not because I don't think there's money to be made in Nvidia. It's definitely possible Nvidia can grow into a $5 trillion company or even above that, right? But it's just like the big money, when we're talking about that 2x, 3x, 4x, 5x opportunity over this next few years, that's AMD, okay? And this is not a winner-take-all market. There's ton of expansion opportunity for both of these companies, right? Now, here's the deal, okay? Where do I see AMD stock? Let's say 2030. Let's look to 2030. I believe in AMD currently today. AMD's, we can call it a little under a $200 billion market cap, which that makes AMD a big tech stock. It's just not part of the $1 trillion boys club that we all think about as Meta, Apple, Microsoft, Nvidia, Amazon, those sorts of companies, right? But in my personal opinion, based upon all the growth I see for AMD over the next few years, I believe this stock price is going to increase dramatically by 2030. And I think there's a pretty good probability that AMD could be a $1 trillion plus company, enjoying that $1 trillion plus crowd of stocks by the year 2030, based upon where I see their revenues going over the coming years, their margins going over the coming years, and their earnings per share going over the coming years. And then thinking about it in terms of buybacks, right? Because as AMD becomes more and more powerful, they bring in more and more money. What they're going to be able to do is then do massive share buybacks, which guess what? That helps your earnings per share. Because what we're going to see for AMD is their net income explode to the upside over this next 5 years, right? And additionally, if they're doing massive share buybacks simultaneously, then they're going to be able to put themselves in a situation where their earnings per share is going to skyrocket because they're going to be taking massive amounts of shares off the market while their net income is also increasing rapidly. And that's why the earnings per share is going to increase at a much more rapid clip than revenue. So when I talk about 25 to 45% revenue growth per year for the next many years, right? Just understand the earnings per share growth on the back of that is going to be way more extreme. And not even close, but like way more extreme than how much revenue is going up. So I look at AMD right now and I'm like, this is the biggest gift of a stock. I think this stock right now, trading at where it's trading, we can call it $120 a share. And especially if they continue to sell this one off over this next, 90 days or whatever, I'm buying every share in sight. And I think as 2025 goes along, I think more and more people will start to realize this AMD story is a little more exciting than what they thought it was, right? And then they're going to come to realize, oh boy, and the thing you got to understand about these sorts of stocks is when they start moving, they move rapidly. It's not like you have all this time in the world and it like slowly goes up. This isn't some like dividend value stock. When Nvidia moved, it moved so fast that people never even got to jump on the bandwagon, right? Because they were trying to assess, like, is this even a good buying opportunity? Because the stock was going up so rapidly. If you think that can't happen with AMD, I got news for you. That can. I've seen it happen several times with AMD over the years, where it will make a unbelievable move in a very rapid amount of time, and also in 2x, 3x, 4x, like that. And people are all of a sudden trying to wrap their heads around, like, oh my gosh, is this move real? Is it overextended? They start worrying about technicals. What about the RSI of the stock? Oh, but, you know, and it's just like, when it's in that down period, you got to buy and buy and buy and buy. And then you hold on as tight as you can. This is a bull, okay? You hold on as tight as you can and let the stock do his dang thing, okay? Hey, I want to thank you so much for watching that clip here today. I hope you really enjoyed that one. What you're looking at right now is 1000xstocks.com. 1000x does not just show you a billion different metrics that are completely irrelevant. It's curated, mandatory metrics, advanced metrics, curated for long-term investors, not for traders, so you can understand a company on the highest level possible, how it operates, and most importantly, making judgments on whether you want to invest capital into a company or not. Understanding the upside, the downside with companies. Is that company worth our investments, or shall we keep our hands away? So how you can access 1000xstocks.com is you can go to the description area of this video, or you can go to 1000xstocks.com, apply for access to the service. Well, what's a way to play AI chip demand outside of buying Nvidia stock, AMD, ARM? And so obviously you guys know I'm buying AMD very heavily right now. I think this is a great opportunity, and especially in the 120s for AMD, right? I did this video 3 weeks ago called Buy AMD Stock and Don't Stop Buying. Buy every share you can. So obviously I'm very biased in terms of I believe this is an extraordinary opportunity to buy AMD stock, right? And the reason being is AMD is not trading at crazy valuations, and we haven't even really begun to see the big AI volumes for AMD. That's really going to play out over the next 3-5 years. And so given that, in my opinion, very cheap forward PE and 2-year forward PE, with this type of growth AMD has coming over this next 3 to 5 years, I think it's a pretty extraordinary opportunity, right? But I understand not everybody's looking to buy an AMD or an Nvidia or these sorts of stocks. And the fear is, what if one player makes it impossible for the other player, right? Like, let's say Nvidia makes it impossible for AMD to really compete in the AI chip market, and Nvidia just completely dominates it over the next 5-10 years, and AMD just can't do a thing there, right? And so it's a fear. So people say, I don't really want to own that. But then people might look at Nvidia and they're like, Nvidia has this, close to $4 trillion valuation on it. They may look at that and they say AMD might come in and start eating market share big time from Nvidia and cause margin compression for Nvidia and revenue compression and growth rates and things like that, and it could be ugly. So they're like worried about that. Then there's worry about custom chips, right? In Amazon, Meta, all these big companies, Google, right? All doing custom chips. So there's fear from like, well, what if that's going to hurt Nvidia or AMD? Now, a lot of these fears are ridiculous fears. There's plenty to go around for everybody, but I'm just running you through like how some people think in regards to these stocks. They're like, I don't feel comfortable just owning Nvidia. I don't feel comfortable just owning AMD. I don't feel just comfortable owning somebody like an ARM or Broadcom, right? Otherwise known as Avago. Like, that's the way some people might think about this, right? Now, you could also just own them all. You could buy all the stocks. That's certainly a way you can play it, but there's another way you can play it, okay? So you got to understand, whenever you're talking about electronics, whenever you're talking about chips, all this stuff needs memory. It all needs memory, right? And there's only a few major players in the world when it comes to memory. And one of those companies is a public company named Micron, ticker symbol MU on this one. This company I'm very familiar with. It always trades at very low P ratios. Forward P on this stock is 9, 2-year forward P is 8. The growth rates are extraordinary from this company. And at the end of the day, if you believe massive amounts of AI-related chips are going to be sold, and if you believe the complexity of chips and chip architecture is going to get much more complex over the next 5, 10, 15, 20 years, then that allows a pretty good opportunity for a company like MU. When you think about the memory-related needs for electronics, for chips, for computers, for phones, for everything, 10 years ago, it was a lot less than today, right? 20 years ago, oh my gosh, like go back 30 years ago and look at how much memory a computer had back in those days. You'll laugh. You'll literally laugh if you look at computers 30 years ago and you think about how little memory they had versus what's in your pocket today or what device you're watching this video on right now. It's like a night and day difference. It's like, wow. So memory is always needed. It's always a need in the marketplace, and a company like MU is there. So if you want to bet on more chip demand over the coming years, then you could bet on somebody like a Micron to obviously make their fair share of money. And the memory chip space is very difficult. You can't just like upstart a company and think you're going to compete in these sorts of products. It doesn't work like that. Like, these memory chips are extremely complex nowadays. They take incredible amounts of R&D. The facilities in which they actually make the memory are extremely complex and extremely costly. So there's only a few companies in the whole world that are really big players in this market, and MU is one of them. So you could play that if you want to play this demand. But the one thing I'll say here is MU is very similar to how people used to look at investing in oil and gas stocks. Chevron, ExxonMobil, they're commodities, right? But they own a dominant market share in this business. And the other thing I'll say is, I think it's even tougher to compete with an MU than it was to compete against ExxonMobil and Chevron, right? All are difficult, but I mean, to compete with MU, you're going to need hundreds of millions or billions of dollars. To compete with an oil and gas company, I mean, you can get started for a little cheaper than that. But so that's just a little food for thought in regards to that. It's probably never going to command some big PE ratio. Forward PE on the stock's probably always going to be in that, 7 to 20 range. And that's just what you have to expect. There are certain time periods when you can buy MU, and it's a great deal, and that's usually when you're going through a very down cycle for chip demand. That's usually some pretty extraordinary opportunity. Now, the last thing I want to leave you guys on here today is walking the tightrope, right? Or walking on a balance beam. And this is us as investors. You can't get too down, you can't get too up in these markets, right? Speaking to somebody earlier, they just sold a ton of their Fubo shares literally on Friday. Like, geez, that's tough. And the thing I said is, if I told you how many stories I have of me selling a stock and then it went up substantially the day after, the week after, the month after, right? It's a long list. I've been in the market 16 years. There's plenty of times that I could look back over the past 16 years that I sold a stock and then it went up a ton more right after. I'm like, oh my gosh, like I missed out on another $10,000 of gains, $50,000 of gains, $100,000. That's the cost of doing business. It's the cost of doing business. It's part of the process. It's always going to be like that. You're going to sell some stocks sometimes, and it's going to go up a lot right after you sell. And you're like, are you kidding me? Like, serious? That's part of the process. Don't get too down on those situations. It is what it is. It's a cost doing business. If you're smart enough to, make money in stocks, you're smart enough to find great opportunities, you're going to find plenty more fish in the sea. That's the thing. In the stock market, there's never it never just runs out of opportunities. There's opportunities I see in the market that I'm investing heavily into right now. I think are going to come to fruition over the next few years and going to print me money, right? There's opportunities last year, the year before, and the year before, and the year before, and there's going to be some next year, and the year after, and the year after. There's so many fish in the sea. You never run out. And so that's just something to keep in mind. You never run out. And you just learn, right? You learn. Sometimes you made an emotional decision to sell. Sometimes you made what was the right decision to sell, right? And, you still kind of get bit by things going the other way. On the flip side, you can't get too euphoric over these sorts of moves. It's all part of the process. If you're making good money out there in the market, that's what you should be doing. If you're putting in the work, you're researching these companies, right? You're looking at their valuations, you're using 1000xstocks.com, you're listening to conference calls on there, right? You're doing all this, you're running your projections, and you're making money, that's what you should be doing. So don't get too euphoric about it. You should be winning. Be happy, celebrate, but at the same time, don't get too over the moon about it, because that's what should be doing. No different than if you're a great sports team and you win a game. If you're putting in that sort of work, you should win that game. And yeah, you can celebrate, you can be happy about it, but at the same time, don't get too bored in regards to the feeling around that, because that's what you should be doing. You should be winning. You deserve to win. You're putting in the work, you deserve to win. And so just expect it. Expect it. Expect to make thousands of dollars. Expect to make tens of thousands of dollars. Expect to make hundreds of thousands of dollars. Expect to make more from great investments than you make from, a job or from work or things like that, right? There's many stocks I could run through that I made way more. When I worked at Quick Trip as a manager, I was making 50-something thousand a year, 50-something thousand a year. And then you look at some of the gains I have in the public account, right? Didn't I show some of that earlier? Right here. Keep in mind, I made 50-something thousand a year as a manager at Quick Trip, working 48 plus hours a week on my feet, right? $858,000 gain on Meta, $391,000 gain on Tesla. And keep in mind, I've sold the far majority of my Tesla shares over the years. So it's like the amount of money I made from Tesla is just disgusting. Palantir. I even sold a ton of my Palantir shares, and I'm still sitting on $227,000 gains. And I made, once again, I made like $50,000 to $60,000 a year at Quick Trip as a manager. So just like look at the numbers and just like, this is what you should be doing over time, right? And the fun part is the more you build up your wealth, right, the more the numbers become pretty extreme. And so a spec stock, let's say for me nowadays, might be a $50,000 position or a $75,000 position as a speculative play, right? Which is pretty fun if it ends up becoming that 10x or 100x opportunity. But if you're smaller net worth, it might be much smaller, right? And a big position for me now is like multi six figures, right? And so when those ones 2x, it's a lot of fun, man, because then you're making multi six figures on profits in that, right? So it's just one big game of compounding, getting the snowball bigger and bigger, and just expecting to have success. You're putting in the work, you deserve it. Where people kind of run afoul sometimes is if they just get in the market and they throw some money in some stocks they didn't really put in the work, and then they make money on that, because that's more a little bit of luck, right? If you just kind of like watch a video or something and like threw some money in a stock, that's more luck. And that's when you have to look in the mirror and you have to say, I got to take this stuff more serious. I got to learn this on a high level, because Jerry's not always going to be here to talk about what stocks he's buying, right? In those sorts of things. And so that's why you want to utilize the courses in my private stock group, so you can learn all this stuff, because I teach it all to you, right? I run through the videos, I do exclusive weekly videos, all that good stuff. So anyways, pin comment down there, take your game up to a much higher level than where you're at, so you can get let's call it making some more gains, and then being confident about it and feeling good when you do it, and not feeling like you played the lottery, feeling like, yeah, I put in the work, I did the research, I ran the projections, I ran the numbers, I went through the risk reward, did the SWOT analysis, and I decided to put my money where my mouth is and made that investment, and then you feel good about it, right?